We should get started. We have 90 something participants connected, so welcome everyone to our public dialogue of A2ii and IAIS on this index-based insurance. My name is Lucas Keller, and I'm a member of the Secretariat of A2ii. If you're here with us for the first time, these dialogues are a joint initiative between A2ii and A2IS, the International Association of Insurance Supervisors, talking about relevant topics that the supervisors deal with the platform that exchanges knowledge among peers. Some ideas of logistics for this web seminar. This is a public and open seminar, and this is being recorded. Participants are going to be in silent mode throughout the presentations in order to improve the quality of the audio. Number 3, at the end, we're going to have time for Q&A. Therefore, you can publish your questions on the chat on the right hand of the video. You can turn on your audio by clicking the microphone. If you have any technical problems, please send a message to the Secretariat to A2ii or by email the dialogues at 2a2i.org. Finally, simultaneous audio translation is also available for our English-speaking participants. You can access to this service by downloading the Interaction application. We're going to put it on the chat on your smartphone or tablet, or you can listen via your web browser. Take into account that all of this in the chat instructions. We have a packed agenda today, and before we begin, I'm pleased to say that we have Natalia Escobar that represents the Secretary of A2ii. That represents this web seminars and is going to be introducing this seminar. Welcome, Natalia, and please, you have the floor. Thank you so much, Lucas. Hello, good afternoon, good morning, good evening for everybody in this call. I'm so glad to welcome you to this public dialogue on index-based insurance. Today, we're going to have the opportunity to learn about the use of this insurance based in the results of a survey that the Initiative for Insurance Access has put together between insurance supervisors in emerging markets, economies in development, and advanced economies as well. And I believe that we're going to have the opportunity to reflect upon the challenges that we have in the development of this type of products. I would like to start by underscoring that for the IAS, this topic about index-based insurance has been very important. We have a paper that is specifically about how this insurance can help in financial inclusion. But as you can see today, when we look at the document that was published recently, index-based insurance are also in the intersection of 3 important trends for the world of insurance. The first one is more attention and more action around climate risk. Number 2 is a clear trend of acceleration of digitization of the economy, but also the business of insurance and insurance products that has been even deeper because of the pandemic. And number 3 is how we can contribute to the adoption or to achieve the sustainable development goals in insurance inclusion and insurance as a tool to increase resilience. It's clear that in climate change, we currently are undergoing a time where we can acknowledge the importance of the climate changes, how they're generating risks that are becoming so important in the higher temperatures and increase in frequency, the severity of natural catastrophes. And it is important, this is an important crystallization around the role of the insurance by creating resilience and by allowing the management of climate risk, and also a call to insurance supervisors to assess how climate change risk is impacting the companies and how the products that are being developing are being sold and managed with respect to those that buy the policy or policy holders. If we add to this that besides everything, how it's facilitated, how we distribute the insurance, technology advances such as the use of user-led technology, AI, and particularly the Internet of Things, it makes it easier for permanent monitoring, the discussion of the insurance, giving room to data where they developed index-based products. We cannot ignore that traditionally the focus of index-based insurance has been the protection of the people in the agricultural world, in the harvests, and also cattle in agriculture. And these populations are a lot more vulnerable, and they're an important part of the economy in developing countries. You can see how they are so affected in a disproportionate manner by the climate change. So it is very important that the insurance supervisors have a holistic view of index insurance, not only from the risk point of view, because the products exist, but also the opportunities that are available to help manage this important risks that are important for the economy. Last, I would like to invite you to look into 3 important papers. We're going to be sending you the links on the chat. I'm going to be asking to share that. But first, we have a paper in index-based insurance, particularly for inclusive markets. Issues papers in 2018 about climate change that are related to the insurance sector. And the third one is a link to a draft for the application paper that is headed How to Supervise Climate Change, Climate Risk in the Financial Sector. This was in public consultation. And this has been published in the webpage, this draft. Thank you for your participation, your attention, and I give you back the floor, Lucas. Thank you, Natalia. I have the pleasure of giving the floor to the moderator of today's webinar, Tomás Soleil. He is known by many of you. Can everybody please mute your microphone because we're not able to hear? Can everybody mute their microphone? He's an insurance superintendent, Thomas, in Costa Rica, SUGESE, and president of the Association of Insurance Supervisors in Latin American, ASAL. He is also a member of the Government Council of A2ii. Last week, he was appointed to lead the fifth Financial Inclusion Forum. Welcome, Tomás, and please take the floor. Thank you, Lucas, and thank you, Natalia. For having organized this public dialogue. It's a pleasure to be a moderator of this web seminar because this topic is really changing formal insurance in an accelerated manner. In the past few years have been a lot of advances with a series of projects in low-income countries. And as a matter of fact, this innovative approach has been consolidating gradually as a dialogue to provide insurance services to certain segments that were priorly excluded and they were not cared for before with traditional the insurance arrangements and so on. With respect what the communities face, insurance-based, index-based insurance, also known as parametric insurance, is an insurance in which can be a lot of people and can be benefited. We have indexes that are a lot more specific, commercial models, alternative models that are more adapted to the realities that this type of insurance can provide us, particularly when it's under a regulatory framework that it's correct and pertinent to work with the different markets. On the other hand, Natalia was talking about the recent or growing digitization and the application of a lot of these technologies, particularly after the pandemic, and the use of the value chain of the insurance allows us to have access to these products in a more direct and easier manners. And even more when they're supported by regulations that support it, so this index-based insurance can move beyond coverage against climate and catastrophic risks. And with this, we opened the discussion in this hour, 15 minutes. And with this, we have more opportunities for the insurance markets with a support tool for supervisors, for regulators, and there's no question for legislators and those authorities that are the public policy makers that are interested in closing the protection gap. This year, the topic of the year is to take care of linking how the insurance can be a link to protect at a time where the governments are coming out of the pandemic. We can see the light at the end of the tunnel, and we still have a lot of uncertainty. And this is a huge challenge for the governments with respect to the steps to be taken with respect to the economies and how to overcome the pandemic. There are needs in different areas with respect to policies that are complex, interrelated, and as we're building them, we can see how they're intertwined and how these public policies that are being created that can support each other. Particularly, index-based insurance has shown to be very important for those governments that are looking at the different achievements as part of the strategies to approach climate change. And we can see objective number 13, the Sustainable Development Goal 13, that is a key component to achieve food security, which is the GDS number 2. And we can keep mentioning many more. Index-based insurance can also generate resilience for communities and people by allowing the clients to have access to financing, increase productivity, and that their income can really increase and improve their quality of life. That's GDS number 1. And of course, is number 1 in all of this approach, which is vulnerability. That's GDS number 1. And the insurance, everybody here, we all are very clear. This is an extraordinary tool to provide protection by being able to distribute the risk, to help them and give a hand to those that are hit but in uncertain situation that can damage their projects, their hopes, and the absence of insurance, this protection net, they can probably not grow at the right speed. And some that have been able to get out of poverty will go back into poverty or will remain in poverty if they haven't been able to get out of them. There's some areas that are marginated, and this is something with respect to the Sustainable Development Goals, SDGs. So it's very important, the role of insurance supervisors and the role of the insurance supervisor in sustainable development. It's clear this type of dialogues where we can talk about the different interests, about the different stakeholders, where we can collaborate, where we can really move these discussions forward, are so important in the public and private sector. As we can see, this instrument of hope and protection for the different groups. Regulators do not make public policies. We are the entities that have to watch out about sustainability and efficiency of the markets and a fair care of our clients, but we are clear about what the objective in the market is and sustainability, and there's no question about broadening in the insurance and the insurance as an instrument, a financial instrument that allows the economies that are more fair, sustained, where the supervisor walks along in public policies and how to move on in these discussions. There's no question that with these initiatives, we point out how to guarantee that our insurance markets can offer the services that would support the different objectives that we have. For this reason, the interest of index-based insurance has increased, keeps increasing among the supervisors, and a lot of regulations that are specific, that have been approved, have allowed that we can recognize in the different markets. All the transfer contracts that are based in indexes have this insurance in component, and how we have to move forward. Without anything further, I don't want to go into many details because we have three wonderful speakers that are going to speak more about the different topics, and we will see the different perspectives at the level of supervisor and industry. We will start the dialogue with Regina Simoes. She is a friend for a long time. She's coordinator in A2i for Latin America. Regina will be presenting the results of the findings in the surveys in index-based insurance by A2i, the second half of 2020 with the supervisors. Then we would call German Rodriguez, Director of the Division of Legal Advice, Ujesa in Costa Rica, who would be discussing a broad perspective of the regulatory focus and how parametric insurance was analyzed. Then, after German's presentation, we will listen a perspective of the industry by Carlos Bosterelli. Carlos is the CEO of Micro. It's a specialized entity in inclusive insurance, and I'm sure that this is going to be really interesting, full of useful information. I know that we all are anxious to start, so now I'm going to give the floor to our first speaker, Regina. Regina, you have the floor. Thank you, Tomás. Hello. As Tomás mentioned, this presentation is about some of the findings of the survey in index-based insurance by the A2i, the second half of 2020. It is also an update of A2i of 2018, and it aims to support supervisors and other stakeholders to understand index-based insurance. For those who are not familiar with this topic, index-based insurance, also known as parametric insurance, is an insurance in which the payout to the policyholder is activated by means of an index that has been previously agreed, and it must be objective and independent, such as temperature, wind speed, among others. In theory, any risk that may be linked to an index could be covered by an index-based insurance. There were 28 supervisors interviewed out of 27 countries, 25 from emerging markets and developing economies. On the industry side, there were 11 that answered the survey from both emerging and developing economies. 16 jurisdictions stated that the current legislation allows or does not raise any obstacle for index-based insurance. Supervisors from Africa and Asia had started with index-based insurance programs such as Mongolia in 2006 and Kenya in 2009. Latin America seems to follow this trend since several countries have developed index-based insurance products in the past 5 years, either under the current regulatory framework or by issuing new regulations. The survey states that the three main concerns among the supervisors refer to inadequate or insufficient data, the limited actuarial and technical capacity of insurance companies to implement the products, and adverse basis risk. The lack of experience of the supervisors in this type of insurance is also a great concern, which is why most of them consider it necessary to provide specific training to their teams. But there's no question that the key issue is the fact that index-based risk transfer contracts may not fit within the legal definition of insurance. As a matter of fact, the legal impossibility of acknowledging index-based risk transfer contract as insurance and within the regulatory framework can become the main obstacle to index insurance, such as the case of jurisdiction where the legal definition of insurance is strongly linked to the concept of uh, indemnification of actual loss or damage, which is part of the framework of derivatives. For this, supervisors have adopted different approaches depending on their jurisdiction to provide flexibility to allow a good interpretation or positive interpretation. 3 regulatory approaches were identified through the survey. The approval of specific laws or regulations on index-based insurance, which provides legal certainty for this type of insurance. The supervisor from Uganda gave us an example of this approach in the prior dialogue. Another approach is issuing some legal opinion in favor of including index-based products under the scope of the insurance legislation based on insurable interest at the date of contracting. Germán de Sugese from Costa Rica is going to be talking about this interesting approach after my presentation. The third approach is the adoption of a pilot project, usually in the context of a regulatory sandbox, as an exception to the current law. This has the advantage of testing a product in a controlled environment before introducing any regulatory changes or approving any specific legislation. Industry representations also have mentioned what they see as obstacles and facilitators of the development of index-based insurance. Among the obstacles, we can see an absence of regulation of index-based insurance or even a ban of these products in some jurisdictions. Scarcity of data and the lack of understanding of the products. For this reason, they stress the importance of prior discussions with the supervisors in order to ensure adequate explanations about the products. With respect to facilitators, the industry underscores the importance of regulatory sandboxes and innovative hubs. Similar to innovation hubs, insurers in the more developed countries suggested the setup of a structure to assess benefits of innovative products as well as its adverse effects. They have also suggested a limited window of opportunity to allow corrective actions before and after the implementation of a product. There are other suggestions that were also highlighted, such as the more flexible regulations to stimulate new products, simpler requirements for training for intermediaries, special tax treatment, some agricultural census, and very important that supervisors play more active roles as facilitators, for example, by coordinating debates between the stakeholders. According to the supervisors that were interviewed, there are about 53 products that are being marketed in the 16 jurisdictions where index-based insurance is permitted. These products are offered by 74 insurance companies. There's more insurance companies than products because some of the products in those jurisdictions are structured in the form of consortia with a single standard product for all insurers. This is the case of Ghana, Mongolia, and Mozambique. At the micro level, most products still focus on risks related to agriculture, livestock, especially for smallholder farmers. But there's a new range of products that can be seen that provide protection to different segments for low-income um, consumers and small and medium companies, as more sophisticated clients such as construction and transportation companies. In the mid-level, they target the agribusiness sector, banks, and microfinance institutions. The distribution channels that were used include the traditional ones and alternative channels that are used to the different realities, such as the internet platforms, retail stores, farmers associations and co-ops, savings and credit co-op societies, and other aggregators. Overall, the insurance are in a group form tied up to inputs and distributed by agribusiness traders or through tied sales involving other financial services such as credits where we can see that partnerships are key. We still have agricultural insurance coverage that prevail based in agrometeorological indexes with an increase of area yield index products. But we can see a series of innovative products with more complex and specific indexes. For example, this morning, there was a presentation from the industry from ACA, Indonesia, and health microinsurance that uses the number of blood cells as an index, or the insurance for cargo that is temperature sensitive and is measured by sensors. There's also an increase in the number of products that cover asset risk and for more sophisticated clients, among which is interesting an insurance to cover net losses to a plant of hydropower by drought. As a final message, I would like to emphasize that index-based insurance, due to their structure and rapid evolution, need continuous monitoring, including their impact on consumers. With this, both the industry and supervisors need to be properly trained to face the new challenges that there's no question are to come. Last, for those interested in knowing more about index insurance, we're happy to let you know that the publication Index Insurance Status and Regulatory Challenges of 2020 is available on our website. Thank you. Tomás, you have the floor. Thank you, Regina, for the presentation. And we know that the report that Regina just mentioned is on the web page, and we can have on the chat what we have there. The web page has a lot of information, and we can see that all of this is there. We can see more detailed examples a little bit later on. Now, can you tell us about the experience with the supervisors? Is there a more efficient regulatory approach in the different areas, if they could be more possibility that those that are not included? Thank you for your question. I think, as a matter of fact, everything is based on the context of each jurisdiction. The most important thing in the case of the products, the more vulnerable areas or not cared for, like agricultural area, is that these products are considered with insurance in the regulatory framework and not considered as financial speculation instruments, because only then they're going to be able to be supervised, and as a result, they can offer tools for protection to the consumer. This doesn't always depend on the existence of specific regulations, but it does depend on the experience of index-based insurance. That's why it's so important to have the training. Thank you for your answer. You can send your comments on the chat. And we're going to have some time later on. This topic by Regina really opens for the next speaker. German has a lot of experience because he worked for the International Monetary Fund, and he has worked in this area. He is also a speaker in insurance, and today is a colleague, and he is representing the legal department of SUGESE from Costa Rica to open the possibility of parametric insurance sales. Thank you, Tomas. Thanks to the organizers. I give greetings to all the participants. Yes, yes, as a matter of fact, I'm going to tell you about the regulatory approach of supervision that was done in Costa Rica for parametric insurance. It was done through a legal report or a legal opinion. This instrument in our country allows for the superintendents to give an appraisal about how this is regulated, explaining or issuing an emission condition about the possibilities to use the law. And in the case of parametric insurance index, it was presented with different simultaneous consultation with respect to the possibility of selling parametric insurance in Costa Rica, which really gave room to this analysis that was a topic that we were looking into already from way before. This slide that looks almost Christmassy, what it provides us is the structure of the law in Costa Rica. It's important to explain because it clearly, the legal opinion of the superintendents depends of our particular legislation, knowing that other jurisdiction, it could be different. Let's remember that the insurance contract law regulates a private activity that should take care, should take place in a free manner. But due to the public interest, the states decides to give a series of restrictions. So this means that outside of the restrictions within the law, everything else is allowed. So the law has three main chapters. The first one is general discussions. It's for the different insurance in the market. It has a definition that is very clear with the rest of definitions, and where the insurance contracts that where the insured it has the insurance premium, and when there's a risk, we can see, well, they are going to be paying for the damage that was caused to the person. To satisfy capital, maybe payment or other benefits. This definition is important because this doesn't close the legislative spectrum. But let's recall that legally to pay out is to replace a situation that is accepted. So to pay out, it's always goes along to damage, right? And this is where some jurisdictions we can see that this type of insurance or other similar categories have to fulfill that limitation or that principle where the only thing that can be paid is no more than the loss that was suffered, right? In our legislation, we have this rule, the legal report that analyzes all of this. As we can see in the academia, that there's no principle in the different type of patrimonial insurance, but there's a rule because it has different exceptions, like a certain contracts at a set value. So this law it does not talk about this type of patrimonial insurance, but it talks about other type of insurance. So it's not within the framework of a damage. In this chapter, it states that damage insurance is insurance that covers the possibility of losses in the net worth or patrimony, and they're just for payout, and it's not a source of bringing wealth without a cost. So this would show or would represent for parametric insurance that by nature there are not contracts that are different, but when they analyze risk, they take into consideration the possible losses, but when they pay out, which is when they check if they comply or not with the rule to pay out, they really do not analyze the real payment. So this parametric insurance, they pay immediately. That's their magic. They help in the initial phases of the emergency and the rehabilitation, the part of reconstruction. They can also approach it, but usually for the part of reconstruction, there's patrimonial insurance or damage insurance that analyze the laws, that appraise certain adjustments, and then they pay. So it could be complementary instruments or just parametric, but the essence is to get payment fast. That's why we use the index of the parameter to have a quick verification, and that money gets to the beneficiary as fast as possible, which is essential for resilience. And the other objective is the most vulnerable groups. It's not the same for a company to wait for 6 months in an adjustment of a loss, that for a vulnerable family to wait 2 weeks or 1 day. It makes a huge difference. So in the case of private insurance, this rule does not apply, but the next slide, please. The conclusion of the legal report from Costa Rica is when the damage insurance is defined just to pay out, they do not consider the parametric insurance. So parametric insurance becomes an atypical insurance that is regulated by Chapter 1 of the general topics of insurance, but where the regulations are not applied because its own definition is excludes that part, but in no part of the law it says that in Costa Rica we cannot have insurance that are kind of patrimonial insurance that cover this type of risks that are not damage insurance. So as I was explaining, this is a law that what it does is limits the private activity. So the limits that are not specifically established within the law state that this is a private activity that can develop. So when we say that they have to comply with general rules, we are talking that this is an insurance that covers risks that can be insured, like possibly a patrimonial loss, which needs an interest that can be insured, which is basic, because this is where this insurance is going to break away from restructuring. And these are common principles with everything. But what we see, the difference is that they don't fulfill the other rules. And let's clarify, this doesn't mean that they're not taking into account the laws. the loss is considered at the time of analysis of the basal risk. This is essential because if it's not done that way, then we would be speculating by defining what's the index or the event that triggers everything that has to be there for the insurance. We need to consider the events that are considered that would generate a loss of a certain amount. And based on this is that it is defined how much it's going to be paid and in which situation. The most important thing is that this parametric insurance have a really agile payment mechanism. And also when we say agile payment mechanisms, we have to mention, as Regina said, indexes that cannot be disputed, that do not depend on the whoever buys the insurance or the insurance company. It's about third parties that are the objective. This is extremely important because it was the other way around. Then they would start opening the door to discussion, and by opening the door to discussion, then we go into preparatory processes that make the spirit of this insurance being lost, which is to pay immediately. So our contract regulatory law does not exclude parametric insurance. So the legal report that states that they could be sold. And something that is important is that our law mentions the trade code in Costa Rica as another source of information. So if we don't have any regulation in the insurance contract law, we don't have it in the trade code. So the structure of our legal framework and the sources of international law, we have to go there in order to add to our regulatory framework. And in this sense, yes, we can generate a series of supervisory actions that would allow us to regulate the parametric insurance, which is not easy. This is something that has a precondition, a series of experiences and knowledge that are being put together and that would allow to generate some type of guidelines or instruments. And these instruments should consider the design of the product, the way in which the insurance companies have to approach the basal risk to define the different parameters, the topic about the payments, and something that is important significance in any way that it works similar. The topic about subsidizing, because no market wants for this insurance to become a way to generate subsidies that would affect competitiveness in some sectors. Competence is also something that we don't want to have any problems with. We don't want any insurance company to take advantage about the flexibility in these topics to hook on clients in a way that is not level, that is not fair in this type of activity. And it's very important that the product it's clear and it can pay out, because when we open room for flexibilization, how to sell the insurance, we want for the insurance companies to do their jobs and to bring into the market sustainable insurance in time, not insurance that is going to go out into the market and they have to be taken off the market a few months later, because this would bring a lack of trust into the market, and we don't want that. From that point of view is that we have really looked at the topic of parametric insurance, and as we mentioned, we didn't have to change the law because in a way the law was already considered them, and we hope to start taking in with guidelines and maybe a different type of instrument, anything that we believe is necessary. However, the dialogue with the insurance companies is the way in which we align the expectations and we have put it in practice in a positive manner. Thank you. Thank you, Herman. I'm sure that your experience and your message, it's extremely clear, and we can see because of the novel form that you're approaching this, and that I'm sure that some of these elements that you mentioned are going to make it possible to see these models that can be so complex. And with this, we have the difficulty of incorporating into our market the acknowledgement of parametric insurance. Maybe a quick question. It's it's very important how this is considered for this case for the insurance. Yes, because of what we have mentioned, that the triggering event that triggers the policy depends of a third party, or a third, not a third party, a third objective. I'm going to explain this with a case that that I just read a few days ago about a policy on excess of rain that was considering that the triggering event was when they were breaking the spaces in cells, that in a cell there was a fall of a certain amount of rain, and the way to verify was with satellite imaging. They had two satellite systems that I'm not going to mention because those were the ones that failed. Both satellite systems failed, and right at the time when the triggering event happened, the satellites did not trigger the policy. So the insured showed enough proof. That's proof. There was proof from the soil that the amount of rain fall stipulated in the contract, had fallen. And the contract only considered those two methods to verify whether this was going to be activated. And it's important that the contract really has the possibility. It can say it has this triggering events, but also you can show this type of proof. If they do this, then we can go in the different topics, and then maybe the contract can be paid 6 months later. So when the two items that we're going to verify of the triggering event, but it's clear that the rain really went over the limit, the insurance company has a possibility of making the payment if it's commercially necessary. That means that the insured doesn't have the payment to the under the contract, but the insurance company does decide to pay. So this type of situation can be a lot more frequent in parametric insurance than smart contracts when the triggering event did not work because it's not under the control of the insurance company, but the insurance company is aware that they have to pay and they decide to pay. So these are situations that happen more frequently in this type of contracts, and it's in the paper in indexed based insurance. There's no question that this is one of the big topics that as regulators will look into, and it's about fair treating in a fair manner our clients, and that's clear. And at the end of the day, things can be resolved, and it's important for governance. And how the different entities need to have within the internal governance processes a way to solve these parameters. Because it could be, problems with the risks, yes, and anything that is additional within the process that it could be in unclear. So thank you so much. Let's go to a different type of outlook. very important, and it's the one about the industry. Carlos Buelsterli, CEO of Micro, which is a specialized entity in the inclusive insurance solutions against natural disasters. He is with us today, and we thank him for being here with us. And Carlos has been the CEO for Micro since 2014, and he was with Swiss Re before. Welcome, Carlos. You have the floor. Thank you so much. Thank you for inviting me to be here with you, sharing micro experience with this type of solutions in the region. The agenda that I'm going to be discussing today in a few minutes is the following. We're going to be talking about 4 topics that I was told that would be interesting for you. The indexes that we are using in Micro to take care of the needs of our people, how this is being distributed, the solutions for local partners, what is the target market, who are the solutions targeted to, and the last item about regulatory aspects, not so much from the legal point of view, but as a company that is helping their local partners to implement this type of solutions in different countries. We're going to be talking about the different indexes, the following, the general terms for the design of indexes. We have seen different things, how we design the right index. We have on one hand, we have to choose data sources that are going to help us to measure in a reliable manner an objective relevant phenomena that we know that cause damage in the target population. This data can be sources, can help us to estimate the amount of rain, the color of the vegetation, and the measure of the different measures where we can see if there's any drought or if there are earthquakes, ground sensors that would help us to see if there's an earthquake, temperature, depending on what you see, this is going to affect different things, and we can have different data. It's interesting to see that we have more and more access to data of better quality. The satellites have always been there. Access to data, the reliability of the data has really helped us in the past few years and had made this type of solutions to start becoming more in products that can be taken into the market. Having this solution about relevant data sources, we need to go into bringing the insurance into being parametric. We can see the coverage, what is the insured interest, how vulnerable is that interest that can be insured, what are the risks that I can measure, where they're at, to see the index that I can put together, and what we have in history, if they have paid as they should, and so on and so forth. So we see here the entire model, and with this combination is that we reach quality indexes that are being monitored and they are being perfected. This is a little bit more generic. And I'm going to tell you what we have done in Micro when we get to new markets. We have a study on the demand first. We want to know what are the dangers that they're being exposed, those people that are interested in for us. That's our target market. And from there, we have a long list of risks. Unfortunately, not all of them can be modeled in a way that we can provide a solution that can be accessible, but these demand studies that we have put together are manageable in the current case. We have drought, we have excess rain, and we also have earthquakes. And if you see earthquake is lower in the list of priorities because it doesn't happen so often, nobody thinks about it. So it's one of those that we should be more concerned about because it doesn't happen so often. So it's relatively cheap to include it, and we try to have an influence in our local partners to have it included in our package. Another part to design the solutions that we have is what the people that are interested in what they do in this insured interest, and usually they're characterized about different activities. It's not mid-size insured or very large, very specialized. They have multiple activities that can become part of the, they don't have only, if it's agricultural, it's not only the one type of harvest, they're going to specify the risk, or maybe they want a stored, you know, they have different products. It can become so products, so many products, it can become very complicated. And with this, we went to see that our solutions, number one, the three areas that I mentioned are the ones that are active, and we're going into Mexico, and we're also looking at the wind. We're going to be modeling wind. It's not ready. And for insured interest, we don't want to exclude because we're talking about small insurance, and we want to have a lot of value for the end client. So the part of the premium that is going to be for management is going to be small. So the only way to make it sustainable in time is through big areas. So we need to have an insured interest that is broad, so we don't start to be very complex and very fine in selecting. So the insured interest that we start with is the the damage. If we have a big damage from nature, and I have somebody that is producing something in a productive activity, that productive activity is going to be affected by direct damage or indirect damage, and we focus in the indirect damage because they lose the income. These are called consequential damages or business interruption. So with this, we get to a lot of possible, target clients. How does this work? Well, the index work, we have remote monitoring of the different variables that we have chosen and phenomena that we considered that are of interest for the target population. We are monitoring, we are extracting data when there's a disaster. The platform that looks at this compares the measurements of the deviation with the pre-stated levels with the insured in the policy. And when it says an event that triggers the coverage, it notifies the insurance company, and it would identify those that are insured in this cell, who was insured. The calculation platform says how severe the event was, so what is the percentage of payment that is going to be paid, and the insurance company gives the insured amount to each individual. And looking at what is the message to be conveyed. What are the different channels that we're going to be using? Could be the insured, it could be homes, small business owners, farmers, the individual. We have an aggregator, the ones that already has access to that group that we're interested in. We're looking at a potential group of people that are going to take us to this group that we're interested in, and then we go hand in hand with the one that has walked the last mile. Our focus is to look at the work that somebody has already done. Depending on the link they have with the person, they're going to be buying a policy that is collective, or they're going to be a channel for individual policies with policies that are issued by a local insurance company. And then the local insurance company insures itself within an international insurance company. In the case of micro, it has been 100% with Swiss Re. Micro is on the side. We are facilitating everything because everything that you see as clear and short processes, very straightforward, are not the same. In reality, it's very complex. So the contribution that we have is to see that all of this works, and it goes from the design of the product all the way to sit before with the authorities to see that communication works, to think about additional services to get to everyone, and that's the value or the service that micro provides to the different stakeholders in the chain. This is very quickly where we're standing currently. We are in 4 countries: Guatemala, Salvador, Colombia, and since November last year, we started activities in Mexico with different aggregators or entities that have access to the population at large, our target. The target market. Micro is a company that came into existence after the earthquake in Haiti. This was a devastating earthquake. And the insurance, as often in this type of events, was non-existent. There were different organizations that said, let's have this objective, and created Micro with 3 pillars in their number 1 mandate, focus in the nature disasters. Number 2, solutions that were designed for a vulnerable segment, low income, that is not cared enough or is excluded from this type of tools, and designs that allow to bring sustainability. We believe that this have to be market solutions in order to develop local capacity, and that look at something that is going to remain there. As I was saying, targeted to everybody: poor, vulnerable, mid-class, focus on those that are not cared for, that do not have access to this type of solution, and with respect to the insured interest, anybody that has a productive activity. Just because of they can be potentially affected, it's going to be a reduction in risk or an increase in expenses. So that's the model, in the specific damage to their assets, because otherwise it would reduce our scope. So initially, something that is going to put money in the hands of people so they can stand back on their feet, regardless of the type of damage that they have suffered. So this type of events are big enough so to assume that they had a loss. Next. And this is the last slide. More than regulatory topics. It says the formula for success, but really that's the experience of Micro. It has worked. It has really worked for us to have an open conversation with the supervisors in each country. We see that there is a lot of alignment. With respect to interest, the topic about financial inclusions, it's more and more in the public agenda. It's just sitting with all those that have to be involved and see what are their concerns, what is their interest, and to find feasible solutions. And with this, we've had really good results in the countries where we are standing, and it becomes more and more a topic that people understand. There's less concern, there's more experience, and there's more a solution. These three topics is what were mentioned by superintendents in Colombia in an event that was organized a couple of weeks ago. And I thought this was really interesting for this occasion, and where they really look when they are facing different proposals of inclusive products. So one is the design to be the adequate one, sources of data that are reliable, that are processes and quality control, that they are independent, and that the index is pertinent. That means that it's highly correlated, these movements of the index, with what is happening in the field. Then payments of the product that is balanced, that are fair, that they start paying when the losses happen, and that they match what's happening in the field. And last, product safety or security. We're talking often about, nature, and of course that we know who is behind the product is very important. Very quickly, because I know that I'm out of time, it was the interest that is going to be insured, to make sure that there's an entity that can be insured. And last, very important as the index itself, has to do with the opportunity and the clarity of information to the consumer, that they know that this is a sale, that that what it's coverage, what is not coverage. It has to be very clear. We need to really look into this, because often we're getting to people that for the first time they're having access to this. I know that we're running out of time, so I'm going to stop right here. Thank you, Carlos, for sharing your experience at Micro. It's no question, it is very relevant. You talked and are telling us about the how to have success uh, in this type of movement. A lot of the supervisors that are here, they're going to be very interested. What would be your advice to supervisors who are participating about how to interact with this insurance and how to open this space? I don't know if I'm the right person to give advice, but something that I can think of is that this is a wonderful opportunity that we have today with respect to the alignment and the acknowledgement of the importance of the insurance, the alignment of the interest, that this is more and more a priority in the public agenda, but also technology, methodology, data access. This is something relatively new, not the existence of data, but access. So now is how we put our heads together to do the most possible out of this. And what I could say is, with this seminar, I think is excellent. How can we put our heads together? This is a new field with a lot of potential to start closing in a significant manner the gap in protection. We cannot say that after 300 years in this industry, when these events happen, it's not possible that we can cover only 10% on average. So no, so there's a new way to solve, maybe not to solve everything, but just to take part of this, to have interest here, and what they were talking about this. And everybody sharing what they have, their specialized networks in this, the Access Insurance Initiative. There's a lot of sources, a lot of experts, and let's see how we can use this for our own interests at the regulatory process and the coverage of the basal risk. There's a lot of very smart people working on this, and to become active, to have access to this knowledge is going to help us, maybe not to avoid mistakes, but maybe to help us not to make the same mistakes, maybe to have new mistakes and maybe smaller every time. Maybe that would be my advice. Thank you, Carlos. I think we have 1 or 2 minutes left to answer a couple questions. We have some questions from the participants. Lucas, can you help us, please? There's a question from Fernando Perez Marquez for Germán. He's asking if the law in Costa Rica allows parametric insurance as an alternative risk coverage that is the mechanism for risk mitigation, like a reinsurance type of scheme. I don't know if I understood. There's no limits in that respect from the point of view of parametric insurance. If we're going to be adding with traditional indemnification in insurance, they might have a series of restrictions. If there's it has to be stated if they're going to be getting insurance money from another source. In Costa Rica, and the administrative part, an insurance company cannot sell reinsurance. The reinsurance, it's a thought about another level of risk transfer, the direct transfer of one insured, traditionally insured. It would be to a parametric insurance. As we mentioned, parametric insurance looks at the rehab of the emergency, and this does not stop us from having a traditional insurance, and this insurance cannot go over the real loss after the emergency. Above that level of direct risk transfer is the level of reinsurance, or where each company establishes their own programs and they talk what is corresponding to everyone. Perfect, Herman. There are two questions from David Alfaro. He says, are there any changes to bring the pandemic into a parametric type of way? Should this multimodal? This is for Germán, I believe. And this the one for the sources is for Germán, and the pandemic is for Carlos. Germán? For the pandemic is for Carlos. No, I don't have any knowledge that there's about this. The second part would be, can you repeat that? With the example that you gave on the verification source, that it didn't work in the insurance. So do you recommend that some verification sources, some land, maybe some, just to avoid that type of risk? That depends on the insurance. Some of them, they were very reliable. Usually they have one single parameter. Sometimes the insurance company had two, and if any of the two would be activated, then the policy would be activated. And none of them worked. That was extreme. They could have five, but the truth is how the insurance company feels comfortable. Then sometimes there's an extreme example, but with the risk of setting some parameters or many parameters, is that at the end of the day, this is going to change if these are parameters in conflict. The problem is to leave it open and to say some other means of proof, because then how this is going to be lost and depends on the insurance company. Maybe this should be, how they verify the parameter. and the one that should be working. Let me add something else. With respect to the pandemic, I know that unfortunately we didn't have an answer from the World Bank in this, but we know that they are developing an insurance program at the macro level to cover pandemics. I don't know if that's the number of infected people or the level of the government and so on. And today's presentation, this morning's presentation, we had from ACA from Indonesia, where the parameter was using the index was the number of platelets, because it was a very specific insurance to cover a disease that is very common in some countries, which is dengue fever. So if the person was having a blood test, it could have two parameters. The first one, that it would be by the exam, with an exam or with a test, level of platelets, coagulation. And the other one is that there was the diagnosis, that the medical diagnosis that said that the person had dengue fever. So I don't know. Yes, it's true from the World Bank, and yes, it's there. They have bought the first product, and I understand that this that really triggered everything, and this is based on the indicators that you mentioned. And I don't know in how many countries and how long, and maybe their parameters, that it was just too much. So I remember that last year there was a lot of conversation in this respect, and it had not been triggered, but also some other developments. But the pandemic is not a new risk. It's one of the great scenarios that we have seen, and this is one of the risks that are being insured. But if there's no pandemic, there's no demand. So, and to insure this one, we're too late. And maybe for the next one, we're not going to be having a lot of sales for the next one. So it's, thank you. I suggest one more question. And we are aware that we're going over time. I apologize. We have one question from Patricia Salas from Ferecet to Carlos. Carlos, is it necessary to assess if there was loss of income or increase of cost for the insurers for the payment of the coverage? Hello, Patricio. I haven't seen him for a while. No, that's the one, that's the study that we were doing before. We determine who's going to be covered, how vulnerable they are, and in the case of an earthquake, how this is going to have an impact on them, and that would determine when we start paying, after what deviation, when we start paying. So that adjustment that was made before, it's important that once the product is in the market, to monitor it very closely to see that all of this is close to reality, otherwise to make the necessary adjustments. Perfect. Thank you, Carlos. Unfortunately, today we're out of time. A little bit more than an hour. It's difficult to have and answer all the questions. So thank you once again to our speakers, Regina, Germán, and Carlos, who have taken the time to be with us. And thanks to all of you who joined us. The next dialogue is going to take place on April 22nd on insurance and sustainable development goals. Thank you. Thank you to Tomás Oley for moderating an excellent dialogue. And now, Tomás, is going to take the floor to make the final comments. Yes, time is not always in our favor. This has been a pleasure to moderate this dialogue. I know that we're getting very interesting information and that we have more questions than answers after these conversations. So to push for this public-private dialogue is extremely important. With all of this knowledge and to generate this priority in this topic and to have a real hit in here and to provide more access. As Carlos was saying, it is complex to see after each catastrophe 5 or 6% are the losses that are insured, and otherwise they're going to be unprotected. It's always a space that is rich for the conversation and exchange, and the more we exchange, more we learn, and more we can generate this learning processes. We want to invite more moderators. This is an event for moderators. The next meeting of Financial Inclusion Forum is going to be on July 1st. If you have any questions about how to sign up in social media, but you can call me. They're the ones that are providing us with the support in this effort. The first work session is really interesting, and we were looking at last week. We have defined and approved the work plan for next year, and the topic to be discussed is going to be the framework of microinsurance and how proportional it is for our markets. And I would love to have this region to really take this opportunity and to integrate the discussion of in their financial index. Thank you everyone for participating, and I hope you have an excellent day and a wonderful weekend. Thank you. Have a good day. Thank you.